You're with us here on a fresh new edition of Taking Stock, the show where we look back at the week which has gone by, but also look ahead, more importantly, try and tell you what lies ahead. It's been another good week for the market. The Nifty, the Bank Nifty, indices all in a risk-on mode. Lots to talk about here. I am Prashant. With me, as always, my colleague Surabhi Upadhyay. Hi, Surabhi.
Hi, Prashant. Yes, what a week it's been. More points on the board, right? Nothing seems to be stopping this party, at least right now. Well, we will get you a lot of opinion as we go forward. Lots of voices, including Rhythm Desai of Morgan Stanley and, of course, Kenneth Andrade of Old Bridge Capital as well. Rohit Srivastava is going to be joining in. He's going to give us a technical check on this market. So a lot of that opinion is lined up. Of course, today's live guest on the show is Ayon Mukhopadhyay of IIFL. So let's get his view on this absolutely unstoppable market rally. Those are the other big voices that you will get on the show. But before we get to all of that, let's just quickly rewind back and take a look at what happened in the week. Once again, as I said, more points on the board. So you're talking about a 2.5% move on the Nifty, a 3% move on the Bank Nifty. And simply, I mean, the market knowing no boundaries, so to speak, 11,200, 11,250. These were the kind of levels that were attempted. So what's going on over here? Very, very simple. Liquidity continues to gush in. And then you have, of course, a lot of positive noises on the vaccine front as well. That seems to be powering the bulls. And the dips were getting bought. So look at what happened. Even though midweek we got this noise around China and US, the geopolitical issues once again, consulates being shut down and all that, at least the Indian market chose to buy into all of this negative news flow. So that was the interesting aspect of it. What's worked for the market's favor or the bulls' favor is the fact that look at some of the corporate commentary that we've got. In such a difficult time, some of the main earnings have been really heartening. The message seems to be that when the going gets tough, the tough indeed get going. So whether you're talking about Lever or Bajaj Auto or Asian Paints on Friday, these are marquee names and they've managed to tighten their costs and deliver. So at least no major disappointments from the biggies. Add to this the fact that a lot of the lenders are telling us, the housing finance lenders, that there is increasing demand and inquiries for middle income housing. So those were the positive points coming in. However, the clouds that right now, at least nobody in the market is willing to look at. One of them, of course, what happens to the rural recovery, because what we also get to know is that the cases, COVID cases, are rising a lot more in rural India. So will the rural economy start faltering? Some of the macros are pointing out to that already. And then, of course, we'll spend more time on that as we go along. What the RBI had to say in its financial stability report, those projections on bad loans, they're anything but comforting. However, Prashant, who cares about bad news in this market, right?
Well, you know, not at the moment, Surabhi. Let me toss it across to my colleague Sonal, who's standing by to sort of run us through the ups and downs and the movers and shakers of the week. And then we'll come back and talk about what ahead. Sonal.
Thanks a lot for that, Prashant. Well, interesting moves coming in markets today, but what really did well was the energy index. Nifty Energy, that index was up around 6% courtesy RIL. Nifty IT, the another one, up around 3% odd. But it was the pharma index that saw some some covering in terms of the longs that were built last week. But let's talk about the stocks that did really well. Reliance, that stock is unstoppable, up around 12% this week itself, has touched that market capitalization of 13.5 lakh crore rupees. Power Grid was the another gainer. Eicher Motors, that stock was also up around 10.5%. Apart from that, what did well? It was the IT names. HCL Tech and Tech Mahindra did really well. ICICI Bank was the other gainer ahead of its numbers that the bank reports tomorrow. Let's talk about the losers then. We have HUL, despite reporting good set of numbers, the stock was down 5%. Shree Cement, Z Entertainment ahead of its numbers, down 3.5%. We had Cipla and Hindalco also not doing so well. Let's talk about the broader markets. We saw some good moves coming in there as well. We have Granules, that API maker, continues to surge up around 15% odd. Manappuram Finance, M&M Fin, RBL Bank, some of these private banking names also did really well. Let's talk about the losers, and we have Yes Bank, Petronet LNG not doing so well in the markets this time around. Lupin was the biggest loser as far as the broader markets is concerned in terms of pharma. But all in all, ferocious rally is what we saw this week. Back to you.
Sonal, thanks very much for that. You know, not very much to add except that the environment overall seems to be risk on. And you have to, when you talk about the Nifty, you have to talk about Reliance. I mean, you know, the importance of Reliance and what it is doing to the index. I mean, I think if you take Friday to Friday and take out the index point contribution of Reliance Industries, that would be about 50% of the move would be from just one stock, that is RIL. I mean, easy. Just Friday it moved 4%, and for the week it's one of the largest gainers, large cap gainers. I mean, so I mean, you know, you've got to put that in context as well. So that's one point. Global sentiment is very supportive of risk. The dollar is continuing to go down. That's always good for emerging markets. It's good for commodity prices. I mean, it's not showing up in a big way in metal stocks here in India, maybe because people are worried about the demand side of the equation. But you know, a weakening dollar is supportive. Commodity prices, well, other commodities have been doing very well, and at some point it will show through in stocks as well. On Friday, we got the news that Eurozone PMI is back in the expansionary territory. It's above 50, so that's good news. So, you know, this entire thing that data in the Western world, especially the US as well, is continue to improve steadily. That kind of that theme and that momentum continues. And the data out of Europe will only sort of reinforce that, although there is already talk starting that maybe the bulk of the improvement in data is behind us, and now second half of the year things will start to slow down a little bit, but that's what we will see. And of course, I mean, all these localized lockdowns here in India, they are continuing, but they're just under the radar, and the market is not very much bothered with what's happening. I think that point that Surabhi made, that at some point, you know, that will start to matter. We will see maybe on the 1st of August, when we start to see sales numbers by auto companies for the month of July. Will we see the impact of these localized lockdowns? Will the market start to fret about those then? We'll see. So I mean, you know, a fair bit to watch out for. And as always, let's sort of put some of these points to our guest of the show today. Ayon Mukhopadhyay is Director of IIFL Institutional Equities for UK and Europe, and he's joining us right now on the show. Ayon, thanks very much. Great to have you here. How much of this recovery is priced in now, Ayon?
Yeah, good afternoon, viewers. Well, you know, it's very difficult to say how much of the recovery is priced in because we really have not really seen a full-fledged recovery yet now. So I think, you know, the overall what we are seeing is a completely global rally right now, driven a lot by global liquidity, driven a lot, and this has all been well documented and well said on your show by a lot of guests. So I'm repeating a lot of the points here said, and not also driven by a lot of retail participation, not only in India but a lot in the world, and maybe a hope of a recovery, just not right now, but maybe a recovery that will come in 1 or 2 years from now. But certain points that I would like to mention is, and you have mentioned on certain points of the lockdown and stuff, but one factor I think which I think is important to mention, and again, just not in India, but globally, I think one paradigm shift that has happened in the sentiment is, I think, the fear of now a second wave coming, or let me put it this way, that a globalized, synchronized lockdown that we saw from March to June, July. I think that fear completely the market is now factoring not to come back, of a globalized lockdown or the economy is completely shutting down. So I think that is what is reviving the rally. And if we do see that, and even if the cases continue to rise, I think what is important to see is that if that does not come through, I think the legs of the rally is still there. But again, you know, it's difficult to say that when there is euphoria, the market can really go up. And I remember having this conversation with you in March, and those are the days when, you know, the Dow used to hit down circuit every day, and we used to think, where is the bottom?
Yeah, things change very quickly in a liquidity-fueled market, don't they, Ayon? Ayon, you've lost the jacket and the tie today. Huh? It's the Friday look that you're sporting. You know, I want to talk to you about, you know, one wall of worry, which till now, very happily, the market has ignored. Let me bring in Lata, because she'll explain this to us the best. What we got after market hours on Friday was the RBI's financial stability report, where we have the first official estimate of the extent of rise in bad loans that will play out by the time this year ends. Lata, not looking like a pretty picture?
Yes, it is a little disturbing. The baseline scenario that the Reserve Bank looks at is a 4 percentage point increase in NPAs. It was 8.5% as of March 31st, 2020. They expect it to rise in 1 year to March 2021 to 12.5%. But of course, the gorier picture is for the public sector banks, where even the March 31st number was 11.3%, and that is expected to rise to 15.2%. This is the baseline scenario. Private banks are better placed. From 4.2%, they go to 7.3%. And capital generally for the entire sector, the equity capital, what you call CET, Common Equity Tier 1 capital, that is expected to come down from 11.7 to 10.7. But this is the average. You know, some people will be out of business, and that's what they're pointing out. In a severely stressed scenario, the gross NPA for the entire system could rise to 14.7, almost 15%, and 5 banks will be out of capital. So they don't tell us whether they will be public or private sector, but that's the problem before the government. As you will see, already the credit offtake is coming down. So according to the Financial Stability Report, the biggest risk is growth, and the second biggest risk is fiscal housekeeping. At such a situation, the government may be called upon to capitalize banks. That's the broad picture they are pointing out with respect to the financial sector. But, the governor also says a little cheekily in his forward that he is presenting this report at a time when the financial markets bear no connection, bear no reflection of the real economy. So chances are that this report also will leave the market unruffled. Aeon would know better.
That is exactly the question that I had for Aeon. Aeon, I mean, come on, here it is in black and white. The RBI is giving you projections. Will the market ignore this as well? A 400 basis points probable rise in gross NPAs.
Well, actually, you know, if you see the market, I think the sector that has not really joined the party in a big way is the financials. So, you know, it's a little bit harsh to say that the markets has completely ignored this risk in the financial sector. Of course, in the last few weeks or so, and that is probably buoyed by better than expected numbers on the moratorium side and some results on. Of course, this has come from some of the marquee names. But financials is one sector that is really not, both on the NBFC side and from the financial companies bank side, which has not really, as I said, joined the party, that they have not really reclaimed the lows of March. But we've also, what we have seen as, and on the point of the capital adequacy that Lata was mentioning, and we have already seen that some banks have expressed their desire to raise capital, and some of them have taken approvals for the same. So, we're doing that. But I think for the financial sector, I think among the institutional investors, I think even now the confidence to invest in the financial sector is still not there, and I think they will be, and the NPL issue is something that they are looking at. If you leave aside the top one or two names in the private sector and maybe the top name in the NBFC sector, I don't think so. A broad-based investment thesis is still there to invest in those names. And I think what the market will be looking very closely is that whether the moratorium period will be extended, whether one-time restructuring will be given or not. So these are the things that we'll be looking at it, and looking at this RBI report that has come up. Maybe these questions will be asked even more right now going forward.
Aeon, let me put you an open question. What from here? I mean, what will drive gains in absolute performance-wise? I mean, because viewers who are watching, they don't think like the fund managers. They don't have to beat an index, right? I mean, you got to make money on an absolute basis. Where are those opportunities now?
Well, to be honest, I cannot comment on ideas that will beat the market in 1, 2, 3 months' time. I normally look at more fundamental long-term thesis, and on those bases, the sectors that we believe that we continue to believe this. The markets. And one point that Lata was mentioning also here is that the market's exuberance is slightly disconnected with fundamental reality, which is probably true. But in a medium to long term point of view, I think there are certain pockets where we are seeing better than expected performance. And as I said, the rural sector is doing well. Even in the results sector, we have seen that some discretionary numbers that have come out today, we have seen that. So, we continue to like that, as I keep telling in all my interviews, that we continue to like the insurance sector as a long-term theme in India. Chemical sector we continue to like. Again, that's again as a long-term sector we like that. Telecom is a sector that we did like. It has done very well, but again, these are multi-year re-rating, and it's a conceptualized and it's a different conceptualized play, and so that we will continue to like these kind of names. And again, even in the banking, the top 2 or 3 private names, because they will be eventually long-term winners. So these are the things that we would continue to like, and we would ask our investors to keep investing in them.
Okay. All right, Aeon. Always a pleasure talking to you. Thank you very much for being with us on Taking Stock this week, and we hope to connect with you again in the next couple of weeks. You stay safe out there. We do need to take a very quick break. As we do that, hear out the kind of opinion that we got in from some of the best names in the business on the street throughout this week. We're back in just a moment, and then we talk technicals. Rohit Srivastava is going to join in.
The market's pricing in normalization for 2022. That's going to be the case. Obviously, a lot of ground will be made up by companies that have sold off for exactly the reason, exactly the pandemic and the slowdown reason. And you've got just one, and that's essentially where the market is right now. The breadth is extremely good. Obviously, there are not all winners in the cycle right now. You will have a very select few companies that will go back into the next decade or will generate returns over the next decade.
You can see the rotation in the market. 2 weeks ago, it was Reliance. Last week, it was technology. This week, it is banks. So the market breadth and rotation is fantastic. So, if something lags, some other sector takes it up.
What you're seeing on the Nifty is nothing but a reflection of a global bull market that started sometime at the end of March. Of course, I think a correction is overdue. I'm arguing for that as well. Just the relentless rise, the pace of the rise, I think sets us up for a correction. But the good news keeps coming. And if the world is going to find a vaccine anytime soon, it will essentially mean the worst of COVID is behind us. And into that, I think, the markets may not sell off immediately.
Welcome back here with us on Taking Stock, a week where we saw the bulls climb newer and newer highs, at least in terms of just the action, not an all-time high, but highs getting towards that level. Rohit Srivastava is with us from India Charts. Rohit, thanks for being here. I think no level seems to be sacrosanct. It's that kind of a market for the bulls. But again, how do you read the picture?
I think this week we got some shaking up over the last couple of days, which I think should be mostly done now. I think the pullback that we've seen to 11,000, 11,100 in the last couple of days is more like a consolidation. And completing that, I think next week we should resume our journey to the upside. So I think Nifty is probably headed towards 11,400 or higher. And 11,400 might be the first important level we'll all watch, because that's 78% retracement of the entire sell-off that we saw between February and March. And we of course surpassed 61%. So we start looking at the next important number. So 11,400 is probably that number. But I'm not ruling out that it gets past that as well eventually. But we look for that, which is another 300 points up. Now, on the other side, you had Bank Nifty pull back quite a bit, I think, today, 2.5%. But that too, I think the broad supports are either at 22,400 or a little below that. And holding that, I think you'll keep attempting to get past the 23,000 mark. Now, of course, Bank Nifty has remained much far behind the Nifty itself, because while the Nifty is getting closer to the 78% retracement mark, Bank Nifty is not even gone past the 38% retracement mark. But that said, both indices do tend to move in the same direction. So I would expect it to move higher from here and eventually get past 2380, the high that we made in June, and then probably head towards 24,600. That's my expectation that we'll get there. But in terms of retracement, it remains behind and probably will remain behind the Nifty itself.
Globally, Rohit, are you comfortable with what you're seeing across the board?
So mostly everybody's watching, I think, the US. And when we look at the US, what you see is they've not done much over the last 2 weeks. You get a 1 day up move, 1 day down move. They're generally moving higher. The pace has been very, very slow, and which is why it gets a bit concerning sometimes. But nothing has happened for you to believe that, it's really breaking down. So people do get worried every time you have a down day in the US, which like last night was just a 1% move down. So you're off that high volatility phase where you are actually seeing 3% and 4% days. Now you're typically seeing 1.5% days. So I think that much change has happened. So you have less volatility. You have some amount of fear still in the market, but the trend is still up. I think that has not really changed. So you're seeing slightly higher tops, higher bottoms, and as long as that's in place, you should think that world markets are slowly recovering. I think the big news probably overnight that you might get, or might give you that momentum, could be the next stimulus that they could be throwing in.
Okay, I think that the announcement, the details, etc., I think have been postponed. So we'll see. Rohit, what else? I mean, in terms of just come back talking about stocks here, you've been a big believer in metals. It's not really played out the way it would when dollar collapses the way it has been collapsing. Do you think it will play out, and where else are you seeing opportunities?
Yes, so I do think so. There are, I think, two macro themes that I continue to focus on. The first one is, of course, the falling dollar. And the second one is, and I think it's less talked about for some reason. A lot of people probably don't believe it will happen at scale, but it is clearly happening, which is falling interest rates. So you have bond yields falling, which has been followed up by banks cutting rates, especially on fixed deposits and so on. And I think that trend will continue to, take place over the coming months as RBI keeps intervening there. And I think that's one of the big drivers of the liquidity-based moves. So apart from whatever people look in fundamentals, I think the return of retail, which sometimes is actually scaring people. There are a lot of articles being written about, whether that's a sign of a bubble. I think it's a sign of a shift in money going from, fixed deposits to equities. So a lot of people have started to allocate because the market had fallen, one, and second, because they're actually looking for better yields. And as rates keep going down, I think more and more money from fixed rate instruments will slowly shift towards equity. So this might end up being a much more broader theme than what people are realizing at this stage as far as the investment-based demand is concerned. The second is the falling dollar. Now, of course, that has a direct impact on both precious metals and metal prices, and all of them are up. Copper's up almost 50% from the bottom that it made in March. And aluminium and lead, other prices, of course, slower. So the direct payoff is now, say, for example, you can look at gold-related companies like you have Manappuram Finance or Muthoot Finance. Now, these are interesting stocks to really be watching on the gold financing side, because they directly benefit from rising gold prices, given that they are holding gold reserves. So that's I think, a direct play out which we are seeing. So those stocks seem to be outperforming and probably would continue to, if gold continues to go up, which I think it should. So that's one big playoff. And the metal side, so when you see higher metal prices, you do expect metal stocks to do well, but they've been a little slow. I think one of the reasons I'm citing, at least in the short term, is that why it didn't happen this month itself, and you have expiry next month. You just look at the positions, and a lot of these stocks are actually hitting market-wide limits. So people probably bought into the idea, but because there's been a lot of long position built up in, you had almost 3 stocks in the ban list today, Jindal, National Aluminium, and Steel Authority. I think the large positioning means that, there'll be some unwind as you go into next week, because it becomes delivery settled. And when that happens is when you'll actually get the move. So I expect the move to happen somewhere into expiry week and maybe into next month now, not particularly in this month as I thought. And once that happens, then I think you'll see the momentum into the next couple of weeks. So that doesn't change. I think the metal index itself went past the highs that it had made in June. It just didn't take off in a big way. So it went past that, and then it again has pulled back in the last 2 days of market correction. But I remain optimistic that view will play out.
Got it. Got that, Rohit. So 2 big macro themes which will play out, which should play out in the coming weeks to come. Remain constructive on markets overall. Thanks very much, Rohit Srivastava, for running us through what you make of things and how things are poised going forward. It's a wrap on this edition of Taking Stock. From Surabhi, me, everyone on the team, thank you very much for staying with us. Have a fantastic weekend. We will see you bright and early Monday morning. Thanks for watching.